Hello, 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 and welcome to Trading Made Easy right here on YouTube. I'm certainly glad that you found yourself here. Real quick, for those of you that don't know, right? Because lately I've just been assuming everybody, you know, been to this channel. So for those of you that do not know me, my name is Janice. I am a currency trader. I trade foreign currency. I absolutely love it. I love even more than trading is teaching others how to do it. I do believe that every household should have the ability to trade. And so what I'm doing here on this platform is to share the good news, to share with individuals that you can actually capitalize off of the financial market, the largest financial market in this world. $6.6 trillion a day go through this market. It is recession proof. It's recession proof. It has withstood every economic crisis that the world has experienced. And no one was ever laid off. No one was ever bankrupt in the foreign exchange market. So this is where you want to hang your hook. And more importantly, and most exciting part about all of that is you can do it the simple, easy way. And that's what I am all about. That's what I'm about. Simple and easy. I've been blessed to be able to take what can be complicated, what can be challenging, and simplify it. And I'm thankful for that. And because of that blessing, I'm sharing it. I'm sharing with you simple, easy way that you can trade and capitalize off of this market. Now, I do use a phenomenal trading system. It's called the Triple Arrow system. And that system makes trading so easy. And when I came across this system, I immediately recognized the value. And it has truly changed my trading journey around, right? Now I'm profiting consistently. I'm growing my account. I'm doing things that I couldn't really do before. I may have had to shuffle money around, pay, Peter and Rob Paul, or, pinch off of this and all of those things. Now, I'm not saying that that I have all the money in the world, because I don't, right? But I know where the money is. I know where the money is. So now I'm not only able to capitalize and grow my account, right? But if there's something that I'm in need of a family member is in need of, I know where to go get that money if I don't have it. And that, my friend, is a beautiful place to be. A beautiful place to be, because now you're empowered. You are financially empowered to generate your own money, right? So now you protect yourself from the various things that takes place in the marketplace that affects you and your household. You now have that avenue. So I'm an advocate for the triple arrow system. I am an advocate for the foreign exchange market. And again, I believe every household should know how to trade. So if you hang with me, I'm going to show you not only how to trade, but how to do it simple and easy, right? Okay, so that's it. Oh, let me give you this disclaimer too, because I tend to forget that. I'm not making any income guarantees. I don't know how much money you will make. I don't know if you'll make anything. You may lose everything, right? Because trading is risky. You never want to trade or leverage money that you can't afford to lose. If you follow the rules, however, right? You follow the rules and you discipline yourself, you develop patience, discipline, focus, and you become a student. I can't tell you how important it is to become a student. If you have a get rich quick mentality, this is not for you. This is not for you, because that is not what this is. It's not a get rich quick. However, can you get rich? Absolutely. But it takes time. It takes discipline. It takes you being focused. It takes you being patient. It takes you sacrificing time. It takes you making adjustments in your current lifestyle to fit your studies and your dedication and your commitment. It takes all of that. And if you're willing to do that, you're going to find that you're going to profit more, right? Especially if you have the right system, which the triple arrow systems provide, and the right trading plan, my friend, which the Trading Made Easy provide. There are plenty of trading plans out there. Let me just say that. There are plenty of trading plans out there. This particular trading plan, Trading Made Easy trading plan, is a great complement with this trading system. And we've been, not only myself, but others that's in my Telegram group, that's in the Facebook group, they are seeing benefit in it as well. They're profiting as well. So it does work, right? You just got to keep working it. That's the only thing. So Trading Made Easy is my deal, right? I have a private Facebook group. It's called Trading Made Easy, right? I have a Telegram group. It's called Trading Easy. That's the name of the game, Trading Made Easy. So for those of you that are not connected, I'm going to leave the information, links inside the description. Go ahead on and access those links so that you can get connected. Also, I'm going to leave my calendar so that you can book a private session with me so that I can share the trading plan, how we maximize the system, how we're able to, capitalize on a certain amount of pips more consistently. So all of that good stuff. Just hit the links, get connected, and we'll take it from there. Now today, I should say tonight, because believe it or not, it is 1:31 in the morning. Yeah, I know, whatever. But here's the thing. This was on me, and I had to get it out. It was on my list as well, and I did not accomplish this particular video. So I had to get it out before I go to bed so that you good people can have it, right? So tonight, I should say, or this morning, whatever, we're going to be talking about effective backtesting. Effective backtesting. Now, one of the things that I completely urge is that you narrow down the trades, the pairs that you're going to trade to no more than 3. No more than 3 pairs that you're going to monitor, that you're going to study, that you're going to trade. Because when you're when you're bouncing around from this pair to that pair, and you're trying to catch a setup, you already lost. Because now your clarity is spread too far out. It's too thin, right? And you're bound, my friend, to miss a move because you're all over the place. You cannot watch multiple pairs. You can't develop a relationship with multiple pairs. So what you want to do is narrow it down to 3. No more than 3. And 3 pairs will give you significant opportunity to trade. Now, there you can select your pairs. The pairs that I would recommend are pairs that are not erratic, right? Pairs that, for the most part, are steady. Not a lot of erratic behavior. But now, how do you determine that? Back testing. And that's what I'm going to show you, how to effectively back test. Powerful, powerful, powerful. So you can actually use the technique I'm about to show you to whatever pair you want to trade. Now, I do recommend the Aussie USD, which is what we are on now. Absolutely love this pair. It's steady. It's calm. It does not do a lot of craziness. Now, will it pull back? Yeah, it'll pull back. Every pair pulls back. But it's consistent for the most part. It's consistent. And so you want that. It's steady. And then you have USD CAD. USD CAD is a little more volatile, but it's good for beginners as well. It's good because it is calm in nature as well. The swings could be a little more deeper than Aussie from what I've found, but the consistency with the trend is pretty steady. Now, Euro GBP, that is another one that I would recommend because that's slow, right? It's slow. And in the beginning, what you're trying to do is develop a relationship. You're trying to determine how this pair behaves under different circumstances and all of those things. So you want a pair that's pretty calm in nature, right? Now, that's not to say that news can come out and cause it to do something different. That's not to say that the broker can spike the market. That's not to say, that you can have different entities that take place unforeseen, right? Unforeseen that can cause a shift in the market. That's normal occurrences, normal behavior for the market, right? So aside from all of those things, it's a very steady, slow-moving pair. So for those reasons, I recommend those pairs, right? Now, on to the back test. So there's several ways that you can back test. I find that this is a very effective way, quick and simple. Now, what I've done is I have gone back to 2019. What I recommend is that you go back at least a year, and go further if you want to, but at least a year. You want to be able to determine what that behavior is or was for a whole year, because a lot has happened in a year whereby you can determine how this pair behaves. So at least a year to get a sound measure or sound impression of how the price moved for this particular pair. So you go back a year. Now, on my chart, and please forgive all of these, but when I start going back, it just populates when it does that. It's crazy. But nevertheless, ignore it, right? Just ignore it. You want to make sure, first and foremost, that you have the 50 moving average, simple moving average on your chart. Okay? So right here is, we are in 2019 June. 2019 June. Okay, and let's make sure we're here. Yeah, June 18th. June 18th, 2019, right here. Now, here is the deal. What you want to look for is how well, that's why this system is like so valuable. And let me just say, we're at the last hour here on the new release of the upgraded system. So you still have time if you see this video, but come Tuesday, it's done. It's a wrap. So what I recommend, get the current system so that you can have the best of both worlds. You can have 3 systems for the price of 1. There's no fee, no charge for the upgraded system if you have the current system. So I recommend that you get it so that you can have the best of both worlds. You can use both systems. It's golden. It's golden, and you're not spending any additional money for it. So it's like, why not? If you get the new system, why not just get this system now so that you can have this system and a new system? If you decide not to, however, you can certainly get the new system, which I totally recommend. Every household should have it, right? Get the system, and you'll pay the same fee, which is $323. So get it, and you'll have 2 licenses with that. Anything more than 2 licenses is an additional $150. So that's going to be the deal. And right now, it is not going to go up, but who knows? Like, who knows? Because truth be told, this system could cost a whole lot more than $323. And that's it. No monthly, nothing. That's it. This system is well worth more than that. But this is a gift to the community. This is a blessing to the community. So I'm just doing my part and making sure everybody knows. So I'm going to leave the link inside of the description. Access the link, buy your system. Buy your system. Whether you make the cutoff or not, get the system. Just get it because you're going to need it. It's valuable. Okay, let's move on. Alrighty. So 50 moving average, simple 50 moving average. What you're looking for is to determine how well price respected the 50 after the triple arrow appeared. So after the triple arrow, because we don't do anything until the triple arrow comes, I have a totally different trading plan. What I'm sharing with you is not it. It's not it. Book a one-on-one session with me. You'll get that trading plan. I'll show you how we maximize the system. Phenomenal. Okay, but this is not it. So what you want to do is, in respect to the triples, right? You got your 50. Now, this is arrow to arrow as well, which is phenomenal. But what you want to do is, once you get your triples in that candle where the triples came in close, and it closed above the 50 because it's bullish, right? That's a criteria. Now what you want to do is follow the price from the entry to the opposite big arrow. And you want to ascertain how well it respected the 50. So in other words, did we have a lot of breaking of the 50, breaking up, breaking up, which a lot of pairs do, right? So this is how you determine the behavior. When you can determine the behavior, you know, listen, that's a great relationship. You know exactly how this pair will act 85% of the time. That positions you to profit, you know, more than 85% because of the way that we're going to trade it, but it gives you a very, very comfortable and confident feeling about the behavior of the pair. You still need to make sure you don't over leverage your account. All of those other things still apply. We're just strictly talking about back testing to determine the behavior of a pair. And that's how you determine the pair that you want to trade, right? So we would have gotten in here. Now, we're going to go to the big arrow. Now, what I did was I put this horizontal line, this green horizontal line here, to identify where you would have gotten in on the position, right? And again, we know when to get in because we have parameters set up to let us know when the triples has appeared and all that good stuff. That's not what I'm talking about here today, but one-on-one sessions, you'll get all that good stuff. So we got in here at this green horizontal. Now, what I want you to do is follow to see if and when price broke the 50 or your entry. Because you know if it went past your entry, you would drawdown, right? So we have some drawdown right here. How much drawdown did we have? I won't even count this in the big scheme of things, right? 13 pips, nothing, right? So now let's keep going. Keep going. See, it's riding the 50, nowhere near your entry. So what does that mean? You're in profit. You're riding, right? You're in profit. So let's keep going. Let's keep going. Now, you don't see the horizontal line because it's way down there. Price is way up. Means what? You're in profit. But what I want you to notice is how well it respects the 50 after the triple arrows. After the triple arrows. Also, what I also teach is how each day you can go in the market while you're still riding this, right? You can go in the market and you can make some more money on a daily basis. Again, access the link, one-on-one sessions. This stuff takes a long time. I can't possibly do all of this. And there's a time issue involved. So, you know, you just got to pay for the time. I don't break anybody's pocket. And when you access the calendar, you'll see that I'm just really charging for my time. That's it. Because I love showing people this. I absolutely love it. I do not get tired of it. Okay, so it's respecting. Oh, what happened? We got a break. Boom, we got a break, right? But guess what? It broke below and 46 pips. Now, this is what I do. Now, this is serious back testing right here. This is what I do. I note, basically write down the pip, the drawdown in pips. How many pips in drawdown did it actually do between arrow to arrow, big arrow to big arrow, or say triple to big arrow, because that's when you would get out, right? How much drawdown did that occurred in that run? So we got 46 here, and so at 46, and then it went back up, but this was the initial, and then it started rallying, but this is 46, and then obviously as it started going back up, that 46 starts to decrease, but it did drop 46 pips, and that's what you want to capture. Okay, so now we're back above the 50, right? And voila, bam, big arrow, big arrow. So from the time we got in, which was the 18th of June, right, to the big arrow populating, which was, and this is 2019, guys. And that is, I'm going to have to go this route, hover around it so it can give me, that is July 4th. So the 18th of June to July 4th, we're looking at a little over 2 weeks. And it only drew down 46 pips. That's a win. Now, I'm not going to do the whole year with you all. I'm just showing you what I do. This is called effective back testing. So you need a pencil and paper, because what you're going to be doing is writing down the number of pips in drawdown that price actually went through. Okay. So now you got the 46. And then when you complete the whole year, then what you're going to do is whatever amount of number, let's say you have, well, let's go with, it's a whole year. So that's, well, it could be more than 12. Let's just round it off and say 20. So you have 20 individual pip counts. So you would add the pips, right? Add it all up, and then you divide that number by the number of pip counts. So if it's 20, and let's say when you add it all up, it added up to, let's say 630, right? 630 pips for that whole year. I'm just hypothetical, right? But let's say 630 for the whole year. Then you divide that by 20. That gives you the average number in pips that particular pair went in drawdown. And that's how you know what the potential loss is. You can even measure it that way. But again, with the strategy I use, we do a little different. But that information is very vital to you determining, one, if this is a pair that you want to trade. And it lets you know, okay, this pair does not typically, because guess what? In a year's time, we had news events. We had, upset in the world. We had, market makers doing their shenanigans, brokers spiking the market. A lot happens in a year. And so when you can consider that with the total amount of pips that it actually, went the opposite way, you can get a really, really good idea as to what this pair's behavior is. And this is what you want to do for whatever pair you are going to trade, that you're going to study. So before you select a pair, you need to know why. And this is one of the reasons, one of the ways that you can determine why you married to Aussie USD or USD CAD or whatever pair you're going to trade. You need to know why you trade that pair. And this, what I'm showing you, is how one of the ways that you can determine that. And I think that this is very, very effective with the triple arrow system. Because with the system, you have the arrows, which populates, and then you have your 50, and then you can just go arrow to arrow. So from arrow to arrow, how well did it respect the 50 after the triple arrows appeared? That's key. That's key. So that's why you need the system, right? So now we're here. So I'm going to just do one more. So now we're bearish, right? So what are we going to do? We're waiting for what? Break of the 50, right? Break of the 50. This is what I do. Well, let's go with a horizontal line. Break of the 50. We got our triples. We got to make sure we got our triples, which we do here. But I don't get in. You see all this consolidation. You wouldn't have saw that. But nevertheless, I would be waiting for price to break and close below the 50. So right here, it broke and closed below the 50. So what I'm going to do, and again, this is not my Trader Made Easy trading plan. This is something different, right? So don't get it mixed up with the other, intraday trading methodology that I use. So now this is the entry. Now we're going to follow it. What are we looking for? We're looking to see how well price respected the 50. How well did it stay under the 50 until when? Until the opposite big arrow appears. So from this entry right here point, as you can see, it never came back above it before the big arrow appeared, and the big arrow appeared right here, right? So we didn't have any drawdown from this entry. You was in straight profit. Straight profit. That's a beautiful thing. Okay, so right here, from this point to about here is 103 pips. 103 pips, never was in drawdown, right? This is Aussie USD, the behavior of Aussie USD. So now we bullish. What are we doing? Same thing, okay? So we didn't, no number to calculate on that one because it didn't break the 50. Not only did it not break the 50, but it didn't go beyond your entry, right? That's the main thing, right? Okay, so here we go. We have our triple arrow, which came here, and we have this. So basically right here, either one. So right here, let's go that we put our entry here. This is where we got in, but I'm using a horizontal line so you can see how price respond. Okay, so we got in right here for what? For a buy. So we got in here, we got a little drawdown. So I need to capture that. This is what you do. Capture the drawdown, and it drew down 16 pips. So now you're gonna write down 16 pips, right? Because we're going from arrow to arrow and we're calculating that. So we got 16 pips, then it rallied back up. So now let's monitor it. It's still above. And even though you had a drawdown, it still was above the 50. It still respect the 50. But it's a drawdown based on your entry. So you write that down. So now we just follow it. Follow it. It's above the 50. It's just riding above the 50. It respects the 50 very well, very well. Okay, right here, what happened? We got some drawdown. We got some drawdown. Hold on. Where did we get in at? I lost my place. Okay, so we got in here. Okay, good. Okay, we good. We good. We good. So we got in here. I need to take this one off. It's confusing me. Okay, so we got in, where did we get in? Right here on this green bullish candle, right? So we got in here, we captured our drawdown right there, 16 pips, then it rallied back up. Now it's riding up, right? It's riding up. Don't worry about these red candles. It's above your entry. You're in profit, right? It's above your entry, so don't worry about it. And it's riding and respecting the 50 very well because it didn't break it, right? So just keep going. Then right here, we had a break. We had a break. Okay. It broke the 50. But why this looks... Okay, okay. So we're still good. It broke the 50, but it did not break your entry. It didn't go below your entry. So you're still in profit, even though it broke the 50. But we want to capture that as well, right? We want to capture that as well. So it broke the 50, 20 pips, roughly 20 pips. And like what I like to do too is, and you know, this is a weekend homework, if you will. Have two columns when you went and draw down. So when it broke past your entry, and then when it broke past the 50, you want to capture those numbers. Okay, you can do them together. You can do it separate, but just so you can get clarity, you know, you can do it separate. So how many pips was that? 20. You write that down, right? Bam. So now what happens? Oh no, we got to go further down because it went here before it started rallying back up. So that is 31. 31 pips. Write that down. It broke the 50, right? It retraced 31 pips beyond the 50. Then it rallied back up and bam, it hit you. But guess what? You was only in drawdown. Where did we get in at? I keep missing it. You was only in drawdown like 13 pips though, because it went beyond your entry. Everything else, even the break of the 50, it was still above in profit. It was above your entry. So you was good anyway. You see that? And this is what you do. Now you're bearish. So you got your numbers, you're calculating. This is how you determine how a pair responds. At least a year. Do this on the weekend. Do it when the market is closed, so you ain't worried about what price is doing and it's not moving around. This is how you develop that relationship. Okay. So same thing here. We're bearish. When are we getting in? Below the 50. We're getting in below the 50. So, and the key also is to get in below, like try to get in early, more or less. You don't want to get in down here. So you want to get in right at the break. Now you also can get in at the triple as well. You can do that too. I'm so used to getting in the right territory. Because I know in the beginning of the video, I was like, when you get the triples, you could very well do that. You could do that. But I'm just used to trading in the right territory. And if I'm selling, I'm only selling below the 50. If I'm buying, I'm only buying above the 50. That's just, I'm programmed that way at this point. So nevertheless, you would have gotten in. So right around in this area here, you would have gotten in. Let's just put it there, right? Now, what are we going to do? We're trailing it, trailing it, trailing it. You got in here, you had some drawdown from here up to this point is about 16 pips. Nothing, right? This is nothing. So you got your 16 pips drawdown, then what? Then it started rallying. Look how it's respecting the 50, respecting the 50, respecting the 50. You all the way up here. Your entry's all the way up here. You deep in profit. You deep in profit. This is how you trade. And this is how I trade arrow to arrow. But this is how I backtest, right? And I backtest several pairs. And I like the way the Aussie move. I like the way the Aussie move. Some others as well. But I want you to do your due diligence, okay? I'm giving you Aussie as an example. And those other pairs that I mentioned are good for beginners, or even if you're not a beginner, but you just like a slower, more calm movement, then those pairs will be great as well. So we're going down. It broke the 50 a little bit here, right? Just a tad. Then it came right back. See how I respect the 50? Respect the 50. Respect the 50. So we had a little break right here of the 50. 13 pips, right? Not a problem. Came right back under. Then we went back up. Went back up. It broke it. Another 10, 11 pips. Not a problem. And guess what? Boom. Drop down. Big arrow. Now we get out. See how simple that is? So you would have capitalized on all of those pips first and foremost. And you basically was in profit from the time that you got in the trade, right? So you would have gotten in, let's say you got in on the triple right here. That was the 19th of July. If you would have got in here, that's the 22nd of July, okay? So then let's go down to our opposite big arrow. These little arrows just killing me when that happens. And that is what date? Pop up, pop up. See? Okay, there we go. August the 7th. August the 7th. So less than a month. It's less than a month. I think that's about 3 weeks, right? No problem. Not to mention, this is stress-free trading. Like, you don't have to worry about this. You don't have to keep watching the chart. You're in. You're not getting out until when? The next big arrow populates. And you're riding in profit the whole time. Even with a pullback, a break of the 50, you're riding in profit the whole time. You can't beat that, right? So I know that trading style is going to work for someone, especially those that can't really get to the charts. I hate when those clunk up like that. When you can't get, that looks so nasty to me. That looks so nasty to me. Okay, so we up here. Let's see. You can't get to the charts. You're busy. You just don't have that kind of time or flexibility or desire. That's 343 pips in about 3 weeks. And you have done nothing but put your trade in and you got out. That's it. And you was in profit the whole time. You went in drawdown 13 pips the whole time. So hopefully you all can see the value in that. Remember, pick the pair, go back at least a year. You want to write down from the triple arrow, how well did it respect the 50 from the triple? And then you ride that to the next big arrow. And that's what you're looking for. How well did it respect the 50 from big arrow to big arrow? Okay. So that will definitely put you in a much more empowering position. Okay. Again, it's not too late, but you got to act fast. This is not the time to sit on the fence. Get this system so that you can get the 2, the 3 for 1 deal, and you have the best of both worlds. And it's just going to be a blessing to your life. It is. Access those links there so that you can get plugged into the Trading Made Easy community as well, so that we can peel this onion back and I can show you some neat, nifty ways to just capitalize in the market. All right. I'm getting sleepy now. I'm starting to act silly. So, and I need to stretch this out. It just gives me the creepies when they all bunch together like that. Anyway, you all have a great, great morning and enjoy the rest of your week. And I'll see you on the next video. All righty. Bye-bye.